So fiat systems always fail. Look, if you own 0 Bitcoin at any age, you are doing it wrong. Okay? You're exposing yourself to more risk than if you actually had X% of your portfolio in Bitcoin. We still haven't talked about the regional bank crisis in the USA. This is why Bitcoin was designed, people. Okay? Bitcoin was designed in the last great financial crisis, 2008, 2009, 14 years ago, for the next financial crisis, which is now. This is a clown show, and that's the problem you get when you hire administrators and put them in a risk chair. Okay, well, the problem has always been the system, but the system itself has never been as levered as it is now. So what happens as you increase the leverage in the system, the frequency and severity of the downturns increase, okay? And so, but let's be clear, the fiat system has always been this way. And history will tell you that fiats always fail for this exact reason. So fiat systems always fail. And we're just recreating that same problem in a modern age with central planning that is not just central planning of, let's say, the Roman Empire. It's the central planning of every single fiat country in the world, all operate on the same model. So we can blame the system. We shouldn't be surprised because those systems always fail. But then there's a great reset and you start fresh again. But the pain to start fresh is monumental. And people just forget that, these crises have happened over time when fiat fails. Here's the problem. It's now caught up with the G7 countries because when in the 1980s, when inflation was really high, there was a Fed chairman by the name of Paul Volcker who did raise interest rates to close to 20%, 20%. But the difference was the federal debt at that time was far reduced from the current level of over 120% of gross domestic product. At that time, it was around half of that. Now we're at a point where total debt to GDP is 120%, which is to say when you raise interest rates even to 5%, the interest expense on the existing debt is growing so quickly, you can't keep up with the expansion, the organic expansion of the debt. And that's where we are right now. So the system is to blame, but we are now at a point where we can't reverse it. You see, after the great financial crisis, there was the chance to be able to reduce this mathematically. I don't think the political wherewithal existed to reduce the debt, but mathematically you could have achieved that. Now it's impossible to achieve that. We are at a point where the debt spiral is so large that no matter what you do, you can't reduce that debt burden enough. The economy can't grow fast enough to keep up with that expanding debt burden. It's mathematically impossible. So that's where we are right now. It's not good. This is a clown show, and that's the problem you get when you hire administrators and put them in a risk chair. All paths lead to Bitcoin. I'm not calling for a collapse of the economy per se, or the financial system. There are definitely things that can be band-aid solutions, but no matter what, the 100% certain outcome is fiat debasement because they need to continue to print more fiat to pay the debt burden. Okay, as long as the market accepts that, the system can continue. But the only 100% certain conclusion is the debasement of fiat, which means you need to set an investment portfolio that protects you against that 100% certainty. Let's be careful. They pushed interest rates there because they were fearful of deflation. Because in an economy that is technologically advancing like our society is, Jeff Booth, a good friend and fellow Canadian, would tell you that should be deflationary. Technological advances should be deflationary, and that's true. But the central bank had to fight that because of the banking system that needs inflation. assuming I am not giving financial advice, I'll just tell you what I do. I own hard assets. Yeah. I own real estate. I own gold. I own silver. I own Bitcoin, the best hard asset there is, but I'm not all in on Bitcoin. If I was under 30, I would actually focus on accumulating a given percent of my net worth in Bitcoin. Because Bitcoin, I believe, is the best asymmetric trade opportunity and investment opportunity I've ever seen in managing risk for over 35 years. You evaluate the risk. You say, for this level of risk, I need to anticipate a return of X. And if the risk is twice as high, the return should be 2X. Okay. Like, I mean, that's a rule of thumb that you have to increase your return as the risk increases. And the funny thing is that Bitcoin appears to be risky, but the appearance of risk versus true risk are two totally different things. Okay. So I actually believe Bitcoin to be incredibly unrisky. In fact, I believe Bitcoin is insurance. And since it's insurance against the fiat Ponzi, I advocate everybody needs to own some Bitcoin, or else they're actually taking higher risk by owning zero. The proper portfolio allocation is going to depend on the age, the family obligations of the individual, the lifestyle choices. All of this is to say everything changes with your age, your income, your family responsibilities, your personal risk tolerance, and your lifestyle desires. But don't own zero. Look, if you own zero Bitcoin at any age, you are doing it wrong. Okay? You're exposing yourself to more risk than if you actually had X percent of your portfolio in Bitcoin. And generally, for the non-believers, go and get 5% of your portfolio in Bitcoin. I know it sounds like a lot, but it's not. You still have 95% of your portfolio in other stuff. And this 5% could literally go up 100-fold from here, which means that 5% turns into 500%, everything else being equal. That's beautiful. That's asymmetry. Asymmetric returns define careers or return opportunities define careers. So I have a price target on Bitcoin of over $2 million per Bitcoin in today's dollars. I got to be real clear about that. In today's dollars, which again, given it's trading at 25,000, is plus or minus 100 times higher. Damn, that's a pretty decent friggin' return opportunity. Right now, it's acting as a risk-on asset, but I believe over time it will act as insurance. And as insurance, it actually becomes a risk-off asset. But this is part of the learning process in markets. All of which is to say, yes. Let's play these two outcomes. Bitcoin can either be worth zero. I don't think that's even an outcome that would happen, but let's just, to make the math easy, a binary outcome, it's either worth zero or $2 million US in today's dollars. I'm going to tell you, I'm about 50% confident in my price target. In fact, I'm higher than that. But to make the math easy, let's assume I'm 50% confident, or a 50% probability. You do what's called an expected value calculation, and you say, okay, 50% chance it goes to zero, 50% chance it goes to $1 million, $2 million. If you've done your math and you believe in your math, yes, you take the bet. It's like going to a horse track where you've watched a horse train, and just like this year's Kentucky Derby, they laid 100-to-1 odds against that horse winning. And you're like, damn, these odds are wrong. I've watched this horse train. Now, I'm not 100% certain he's going to win, but I'm way more certain than 1 in 100. So what do? You go and you take that bet. And the guys that took that bet made out like bandits because they did smart risk management. Someone hacks the blockchain. The network has gotten stronger, not weaker. So it's not a 0% chance that happens, but that is the biggest risk. Other than that, governments can't stop it. Adoption is increasing. We still haven't talked about the regional bank crisis in the USA. This is why Bitcoin was designed, people. Okay? Bitcoin was designed in the last great financial crisis, 2008, 2009, 14 years ago, for the next financial crisis, which is now. And if you're too stupid to realize this, I don't know, Ryan, you and I are wasting our breath talking to a bunch of people who don't deserve our breath because they're just too dumb to understand what we're saying. Does the blame rest solely with the management? Most of it does. But you can't argue with the fact that they were being guided by central bank policymakers that were saying misguided. All I will say is banking is a risky business, and there are a lot of people that don't understand how banking works. But I don't care, because all paths lead to Bitcoin. So we could overthink it and try to define what the outcome is, or we could just sit back and say, I don't care. Either way, you need to own Bitcoin. You don't need to understand how Bitcoin works in order to appreciate how valuable it is. Is the internet valuable? Yes. What's it backed by? The network. Is Bitcoin valuable? Yes. What's it backed by? The network. Okay? It's exactly the same thing. And if they're too stupid, I'm just sick of talking to stupid people, because some of them, you'll never get it through their thick head. That won't happen, because there's a price for everything. First of all, if you choose to own Bitcoin and not eat, you're going to die. So you have to actually spend some Bitcoin to eat. Okay? And then you can say, well, I could pay someone to do this to fix my house. I'm not able to fix my house by myself. And I'm going to use Bitcoin. Because why? Well, the utility of me paying someone to fix my roof in my house is better than living in a leaky house and having all my Bitcoin, but not, living comfortably. So it's like anything, Brian. Prices will rise to marginal utility, marginal cost. Where they intersect, you remember Economics 101? Doesn't matter what the unit of account is. Those two things will intersect and a transaction will take place. Yeah, I like hard assets. So I own gold, I own silver, I own oil, I own real estate. My biggest exposure is real estate. It's a lifestyle thing. I have 3 kids. We have a house. Shame on me, but yeah, we have a house. Like, that's just the way it works. We have an investment property in the United States where we rent an investment property, but we spend some time there. That's a good investment. Neither of them are portable. If I have to move to El Salvador, these are going to go for sale at fire sale prices, because you got to get out. You know what I mean? Yeah. You don't have to have all your assets in Bitcoin. I think we've laid out that scenario pretty well. So don't own zero. I mean, again, for anyone who listens, okay, please do some work. And you're not going to get this right away. It's going to take you some time. But understand how flawed the fiat system is, and then understand how beautiful Bitcoin is as a solution. Now, Bitcoin is the only digital asset that solves it. Ethereum is a proof of stake, centralized fiat asset, okay? Ethereum is exactly like fiat. But Bitcoin is not controlled by anyone. There's a fixed supply. Ultimately, it is the solution. It's the only digital asset that solves the fiat Ponzi. So be careful what you invest in, and understand that Bitcoin is not crypto. Bitcoin is a standalone asset class within the crypto asset space.